Casinos don't win because they're lucky. They win because they understand something most traders ignore. Probabilities never lie. Every game in a casino is engineered around one core advantage: the house edge. That tiny percentage advantage might look small, but over hundreds, thousands, and millions of rounds, it becomes an unstoppable force. Meanwhile, most traders act like gamblers chasing excitement instead of consistency. You might not sit at a slot machine, but when you jump into a trade without a plan, increase size because you feel confident, or risk half your account on one setup, you're doing the exact same thing gamblers do, betting without an edge. And gamblers always lose to the system that thinks in probabilities. Here's the truth. Most traders blow accounts not because they're wrong, but because they think in wins and losses instead of edges and probabilities. Your mindset treats every trade like a verdict. I won, I lost, I'm right, I'm wrong. But casinos never think like that. They don't celebrate one win or panic over one loss. They focus on long-term statistical advantage, and that's why they always come out ahead. Imagine if you traded like a casino. You would stop emotional decision-making. You would stop going all in when you feel confident. You would stop fearing losses because they're part of the math. You would focus on consistency instead of excitement. And that's exactly what this video will help you unlock. The 6 risk secrets casinos use to stay profitable no matter what. When you understand these principles, trading becomes calmer, smarter, and dramatically more consistent. If you're ready to think like the house instead of the gambler, like this video, subscribe, and share it with a trader who keeps blowing accounts chasing luck. Now that you see how casinos dominate the long game, let's explore the psychological truth behind their control, and why this mindset shift is the foundation of consistent trading. One of the biggest mindset shifts that separates losing traders from consistent winners is the ability to think in probabilities instead of certainties. When you treat every trade like a must-win event, your emotions take over. Fear spikes when price pulls back, greed rises when candles turn green, and panic hits when the market hesitates. But professional traders operate differently. They understand that each trade is just one small outcome in a large series, and their goal isn't to win today, it's to win over time, exactly how casinos profit. A casino doesn't care if a few gamblers win tonight. What matters is their mathematical edge, which ensures profit across thousands of rounds. And for traders, probability mindset works the same way. When you think in probabilities, a stop loss is no longer a sign of failure. It becomes a cost of doing business. A losing streak doesn't shake your confidence because you understand that randomness is normal. You stop chasing revenge trades and start focusing on execution quality. This mindset removes emotional overload and keeps your trading logical, not reactive. The moment you shift from "I must win this trade" to "I must follow my edge," trading becomes lighter, calmer, and more predictable. And here's the powerful truth. Once your mind stops demanding certainty, your strategy finally begins working the way it was designed. You start trusting the long-term math, just like the casino trusts the house edge. Now that you understand why probability thinking is essential, let's move into the 3rd risk secret, the one that shows how mastering small edges leads to big consistency. If there's one concept that can transform a trader from emotional to strategic, it's this. Your goal is not to win big. Your goal is to maintain a small edge and repeat it consistently. Casinos don't rely on massive wins. They profit by applying a tiny mathematical advantage over and over again until the numbers inevitably stack in their favor. That tiny edge is what makes them undefeatable across large sample sizes. And this is exactly where traders fail. They underestimate how powerful a small, reliable edge can be. When your mind accepts the idea of the house edge, you stop obsessing over every single candle. You stop chasing perfect accuracy. You stop panicking when the market pulls back. Instead, you begin viewing each trade as one event inside a long statistical journey. A losing trade? It's part of the edge. A small win? also part of the edge. A break-even, still part of the edge. The moment you embrace this mindset, stress decreases and your discipline increases dramatically. This secret is simple but life-changing. Success in trading comes from repeating a tiny advantage with emotional neutrality. Not excitement, not fear. Neutrality. When you remove the emotional highs and lows, your edge becomes stronger because your behavior becomes consistent. And consistent behavior is the only pathway to consistent profits. If you want to break out of emotional trading and finally gain stability, like this video, subscribe, and turn on notifications. These insights can reshape your entire trading psychology. Now that you understand how a small, consistent edge beats emotional decision-making, let's move into the next powerful secret: how to align your strategy with casino-level discipline so your trading becomes predictable and scalable. If you want to trade like a casino, you need more than emotional control. You need your own probability formula. Casinos don't win because they predict outcomes. They win because they structure the game in a way that ensures long-term profitability. And this is exactly where most traders get it wrong. They look at charts trying to guess the future instead of creating a repeatable framework that gives them a measurable edge across hundreds of trades. Your probability formula is built on 3 pillars: your win rate, your risk-to-reward ratio, and your execution consistency. When these 3 elements align, your trading becomes predictable, scalable, and mathematically sound. Most traders obsess over accuracy, but accuracy is not the key. Expectancy is. A trader with a 40% win rate can still outperform a trader with 70% accuracy if their RR and consistency are superior. That's the power of having a formula. When you adopt this mindset, small losses stop hurting. You stop overreacting to market noise. You no longer judge your skills based on a single trade. Instead, you judge based on your data, what your formula tells you about your performance across dozens or hundreds of trades. This removes emotional chaos and replaces it with statistical clarity. And when clarity enters your trading, discipline becomes automatic. If this approach is helping you see trading differently, hit like, subscribe, and share this with a trader who trades without a probability plan. It could save their account. Now that you understand how the winning formula transforms your psychology, let's explore how to engineer this formula into your daily habits so your results compound effortlessly. One of the most powerful shifts you'll ever make in trading is learning to welcome small losses instead of fearing them. Think about it. Casinos lose thousands of small bets every single day, yet they stay profitable year after year. Why? Because they understand a truth that most traders ignore. Small losses don't matter when you have a long-term mathematical edge. What matters is staying in the game long enough for the edge to play out. This is where traders mentally break. They see a small loss and react emotionally, tightening stops, adding impulsively, doubling size to win it back, or abandoning the strategy entirely. But when you view losses like a casino, everything changes. A small loss becomes a cost of doing business, not a personal attack or a sign of failure. It becomes a calculated micro-expense protecting your long-term advantage. When you embrace small losses, your emotional pressure drops instantly. You stop over-controlling the chart. You stop panicking during normal volatility. You stop thinking in terms of single outcomes and start thinking in terms of data, edges, and probability. Your mind shifts from "I lost" to "I executed correctly." And that's the mindset that builds elite-level consistency. Now that your mind is learning to accept small losses without emotional turbulence, it's time to uncover how casinos scale their advantage and how you can apply the same strategy to compound your trading edge. Once you fully embrace small losses and start thinking in expectancy, the next step is learning how to scale your edge, just like casinos do. Casinos don't increase bets randomly. They scale strategically based on statistical outcomes and long-term probabilities. Traders must do the same. You never scale because of excitement, fear, or a lucky winning streak. You scale because your data proves your edge is reliable. This is where disciplined traders separate themselves from emotional ones. Instead of increasing position size impulsively, you do it methodically. Start with your base risk, maybe 1%. As your consistency stabilizes, your edge becomes clearer, and your sample size grows. You can scale slightly, not aggressively. This controlled scaling creates exponential account growth while keeping your psychology stable. Remember, casinos don't chase wins. They expand on predictable mathematical advantage. Scaling requires structure. You must analyze your rolling win rate, your average RR, your drawdown depth, your volatility tolerance. When these metrics align favorably, scaling becomes safe and extremely powerful. You're no longer gambling. You're applying a proven statistical edge with precision. And this is where real long-term compounding begins. If this insight is unlocking a new level of confidence for you, hit like, subscribe, and turn on notifications, because your next breakthrough is one perspective away. Now that you understand how disciplined scaling multiplies your edge, let's explore how to combine casino logic with emotional mastery so your trading becomes unshakably consistent. Scaling your edge is powerful, but without disciplined daily execution, even the best probability formula falls apart. Think of this phase as your casino routine, the behaviors you must repeat every single day to protect your edge and let your system work long-term. Casinos don't skip procedures, they don't break flow. They execute the same routine whether they win or lose. That is exactly how traders must approach the market. Daily discipline starts with structure. Every day begins with reviewing your trading plan, checking market conditions, and confirming whether your edge applies today. No FOMO decisions, no impulsive setups, and no random entries. When you follow a repeatable process, your emotions lose their power because they have no place to interrupt the flow. You're not trading based on feelings, you're trading based on rules. Journaling becomes crucial here. Casinos track every result. You must do the same. Record your entries, exits, RR, notes, emotional status, and whether you followed the plan. Over time, this data will reveal patterns you can refine. When your actions align with your strategy consistently, your edge becomes unstoppable. The final part of daily discipline is restraint, knowing when not to trade. Some days don't offer high probability setups. Casinos don't open tables when odds are bad, and neither should you. Skipping low-quality trades is a superpower that keeps your edge intact. Now that your discipline is forming the backbone of your trading identity, you're ready to combine emotional neutrality with statistical confidence in the next phase. By this stage, your perspective on trading begins to shift from emotional reactions to probability-driven mastery. You're no longer judging yourself by single trades or temporary outcomes. You're thinking like a casino, grounded, calm, and confident in the long-term math. And this is exactly where emotional mastery begins. When fear and greed lose their influence, your decisions finally become consistent with your strategy rather than your impulses. Emotional mastery is not about suppressing emotions. It's about redesigning how your mind interprets market movement. A sudden spike no longer triggers excitement. A pullback no longer triggers panic. Instead, you see these events as normal statistical noise. Your mind becomes centered on data, edges, and expected outcomes. That inner stability becomes your trading superpower, because the calmer you are, the stronger your decision quality becomes. This phase is about anchoring your emotions to logic. Before executing any trade, you pause, evaluate your rules, confirm your probabilities, and mentally separate yourself from the outcome. Just like a casino host running a perfect game, you operate with controlled neutrality. You don't celebrate wins too much, and you don't fear losses too much. Your stability becomes your edge. As your emotions stabilize, a deeper sense of confidence rises. Confidence rooted in math, not hope. And when your confidence comes from probability, not luck, no market move can shake you. With emotional mastery taking root, You're now ready to step into the final stage, where everything comes together into your long-term trading identity. This final phase transforms everything you've learned into a long-term trading identity, an identity built on probability, emotional balance, and controlled execution. By now, you realize the real power of trading isn't prediction, it's consistency. It's showing up like a casino, always following a defined edge, always managing risk, and always trusting the long-term math. When you operate this way, your results stop swinging wildly, and your emotions stop hijacking your decisions. Your new identity is built on 3 pillars: discipline, patience, and statistical confidence. You're no longer chasing quick wins or reacting to sudden moves. You're playing a long game. You're letting probabilities work in your favor, and you're managing your capital like a professional risk manager, not a gambler. This mindset shift alone separates you from 95% of traders who burn out emotionally and financially because they never develop an identity rooted in logic. Now, when fear rises, you return to your rules. When greed pulls you in, you go back to the math. When the market moves unexpectedly, you remember that casinos thrive in uncertainty, not because they control outcomes, but because they control the odds. And now, so do you. You have reached the final transformation. You're trading with identity, not impulses. You're trading with structure, not emotions. You're trading with edge, not hope. And if you want this mindset sharpened daily, then make sure you follow the channel so you never miss the next skill, strategy, or psychological edge that strengthens your trading identity even further. Your journey doesn't end here. It starts becoming who you are every single day.